yes. I know a lot of people hate to hear me say this, but I do believe that cryptocurrencies are going to benefit here. I think in that kind of an implosion in the debt market, when cash is seeking alternative places to go. Look, people think that, I always use the analogy of cash growing little wings and flying away to money heaven. It doesn't do that. It just moves from one set of assets into another. And yes, I do believe it's going to go into commodities in a big, big way. And I believe it's going to go into cryptocurrencies as well. I think the big ones are going to benefit mostly from this. The ones that have been around for a while, the tried and true ones. But look, putting a timeline on this is very, very difficult, but it's not impossible to do. We got to keep our eyes on a few things. I created an indicator. It's called the MMRI, Mannarino Market Risk Indicator. It measures risk in the market, in the stock market, based upon the debt market, okay, the driver here. It's free to anybody who wants it. It's on my website, traderschoice.net. I hope people pay attention to that. When I first put out the MMRI, it was about 80. Right now, we're at just about 300. Above 300, we enter what's called extreme risk. We hit over 300 just 2 Fridays ago. And then all of a sudden it changed when the Fed whisperer, Nick, and the Fed President Mary Daly was floated out to say, oh, come December, the Fed's going to pivot. Like, that's really going to make it is another Band-Aid for you. Okay, yeah. Okay, the market doesn't want to hear that the Fed's raising rates. Okay, whatever. But is it really going to stop the underlying issue here of exploding debt and the money supply out of control? No, not at all. But it will make the market happy for a little while. It's another Band-Aid effect. It can't be fixed. There's no way to fix this without dismantling the system. And that's what they're in the middle of doing here and putting in a new one.